First of all, I think NIO is in a very, very hyper-competitive market here in China. Obviously, there is a bid, and there's typically a pullback in the beginning of the year when you enter a new calendar year, as the year-end numbers tend to be inflated a bit as dealers close. But even with that, given how competitive the market is, they've had to take down pricing in the second half of last year in order to achieve the growth that they were able to in the third and fourth quarter as they launched new products. But it's going to be a very challenging market for all EV makers, including NIO.
Performance, growth, and challenges. NIO's recent earnings report has been a bit of a roller coaster. While there's been some positive news, like Upbeat quarterly results, there's also been a mix of reactions in the market. In this video, we'll dive into the details of NIO's performance, discuss what's driving the market sentiment, and explore the key takeaways from the report. So, what does NIO's latest earnings report mean for investors?
Chinese EV maker NIO set to report earnings tomorrow morning. For a preview, we want to bring in senior markets correspondent Kevin Green. So Kevin, what is the street looking out for from NIO?
Yeah, expecting a little bit of implied volatility or some volatility post this report here. The market's expecting around 12.4% move either to the upside or downside post the earnings. And unfortunately, we are seeing a slide here when you're looking at pretty much the whole EV space this morning. A lot of these stocks are down about 4% after getting some of the Chinese data over the weekend regarding sales. But we are expecting revenue to come in at $2.29 billion, and the adjusted earnings per share estimate is for a loss of 51 cents. I think the biggest thing to really focus on is going to be the gross margin expectation right now.
The market has been buzzing lately with new all-time highs, but NIO investors are in a different narrative. Despite the cheer elsewhere, NIO shares have taken a hit, down by 40% year-to-date. This downward trend stems from various concerns, notably the slowdown in demand within China's fiercely competitive EV sector and the absence of immediate catalysts compared to industry peers. As anticipation builds for NIO's Q4 earnings report, Deutsche Bank analyst Edison Yu sheds light on the prevailing sentiment, which he acknowledged as rather low. He points out the challenging start to the year, raising apprehensions about the intensely competitive market environment. Yu emphasizes that NIO might remain under scrutiny until the efficacy of its revamped direct sales strategies becomes evident in driving consumer demand, or until the anticipated launch of its mass-market Alps brand in the latter half of the year. Despite these challenges, there are some positive indicators. NIO has already reported quarterly deliveries exceeding expectations, totaling 50,045 units. Yu anticipates that gross margins will take center stage in the earnings report, with expected sequential growth driven by lower battery costs. He forecasted vehicle gross profit margins to surpass 13%, resulting in a total gross margin of around 10%. Revenue projections, factoring in a sequential decline in average selling prices due to product mix, align slightly above the BBG consensus. Yu predicts a significant decline in Q1 unit sales, signaling the company's transition to MY24 models and the clearance of old inventory. Notably, NIO is not expected to introduce any new branded cars this year, with the Alps brand's first mass-market vehicle slated for launch in the second half. Management underscores their intention to avoid participating in price wars, emphasizing the importance of a revamped sales force to deepen the brand's reach. While Yu has adjusted his price target for NIO stock downward, he maintains a buy rating, anticipating a one-year return of 56%. This sentiment is echoed by several of Yu's colleagues, contributing to a moderate by consensus rating for the stock. So, how did NIO perform in the fourth quarter of 2023? Well, it's a bit of a mixed bag. While the Chinese electric vehicle company managed to exceed sales expectations for the last 3 months of 2023, its annual loss widened, reaching 20.7 billion yuan, or about $2.9 billion US. Despite improvements in vehicle margins, which rose to 11.9% in Q4, NIO fell short of analyst predictions. Looking ahead to 2024, NIO's chief financial officer, Stephen Fong, emphasized the company's focus on refining business objectives, enhancing system capabilities, and optimizing cost management. However, unlike its competitors XPeng and Li Auto, NIO hasn't announced any major product launches for the year. In terms of deliveries, NIO expects to ship around 33,000 cars in the first quarter, a significant decrease from the previous quarter's 50,045 vehicles. The company's gross margins for Q4 also disappointed, coming in at 7.5% compared to market expectations of 10.2%. Despite these challenges, NIO is gearing up to launch its mass-market brand, Alps, in the fourth quarter. This brand aims to compete with Tesla's locally built models, starting with a swappable battery-equipped model. Additionally, NIO plans to introduce a cheaper sub-brand in 2025, targeting vehicles priced below 200,000 yuan. Facing financial strain, NIO received a capital injection last year through a share sale to CYVN Holdings, a government-controlled investment entity from Abu Dhabi. The company has also reduced its workforce and considered spinning off non-core businesses to reduce costs. NIO's focus on battery swap technology remains a cornerstone of its strategy, with partnerships established with various Chinese automakers and local authorities. However, despite these efforts, NIO's US-listed shares have experienced a significant decline this year, down by 41%. But before we move on, we just want to thank you for watching this far.
NIO has yet to become profitable, unlike its rivals like Li Auto, even XPeng, targeting 2025 to become profitable. What about the unveiling of new vehicles? How are they doing compared to the likes of Tesla? I'm hearing something about a mass market brand that they're going to be putting to market soon.
Well, yes, they have a brand strategy to broaden their brand portfolio. NIO was launched as a more premium offer with a services-oriented business model, which is why they spent so much in battery swapping and in NIO House. So that spread a lot of their capex out, a much higher burden and more burdensome business model than a typical automotive company.
Now, according to NevPost's live updates from the call with analysts following the Q4 financial report, NIO has revealed some significant insights. Firstly, the company plans to introduce two new brands in the coming years, Alps in 2024 and Firefly in 2025. These brands will target different market segments and may be sold globally. NIO intends to continue selling its Alps brand electric vehicles later this year, focusing on the premium segment. The ET5 will remain its most affordable model, while Alps will prioritize deliveries over gross margins. Alps has been designed specifically for the competitive Chinese market and will leverage NIO's existing RAN-D and infrastructure. Its first model will directly compete with Tesla's Model Y, boasting a lower bill of materials cost. The rollout of Alps will begin in Q2 2024, with the Model Y Challenger expected in Q3 and mass deliveries in China by Q4. Initially, Alps aims for smaller delivery volumes, targeting about 10,000 units per month. Additionally, NIO plans to establish its own sales network for the Alps, consisting of at least 200 locations. However, the NIO brand will share aftermarket service and battery swaps. Finally, while NIO's immediate focus remains on the Chinese market, it also aims to expand internationally, including entering the United Arab Emirates market this year. So, how can we assess NIO's current standing in the market? Despite delivering impressive 2023 numbers and a strong performance in January, NIO's stock still faces challenges. The geopolitical risks and its status as a US-listed ADR present additional hurdles for investors. Recent news, particularly Li Auto's robust earnings, has influenced sentiment around NIO. While Li Auto's success has boosted confidence in the Chinese EV sector overall, it has also intensified competition for NIO. This comes at a time when NIO is already navigating through a challenging year marked by a downgrade from JP Morgan. While NIO's fundamentals have shown signs of deterioration, its financial stability remains relatively sound, with a substantial cash reserve of $6.2 billion. Despite this, the stock has experienced a significant decline, reflecting concerns about its profitability compared to rivals like Tesla, Rivian, and Lucid. The unveiling of NIO's ET5 with a 150 kilowatt-hour battery by the Ministry of Industry and Information Technology provides insight into the company's technological advancements. However, the weight and cost of the battery raise questions about its practicality for consumers. So, while NIO continues to innovate with products like the ET5, uncertainties loom over its short-term performance. With intense competition and challenges in profitability, investors may need to approach NIO's stock with caution. So, is NIO a buy at current levels? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.